ladies and gentlemen, thank you for joining us. We are very pleased to be working as an independent think tank to support the Emerging Stronger Taskforce. I think the pandemic is facing the whole world, and certainly Singapore is not exempt from it. In fact, our economy, our society is quite front and center given the global nature of our economy and the openness of our society. The Emerging Stronger Taskforce, which Minister Lee chairs, is taking a very sectoral approach, which is sensible for them. They're making action alliances to really try to get some early results or low-hanging fruit. And the SIIA is a think tank thought to take a slightly different perspective and try to more cut across in specific areas and markets. And one of these is the subject of today, sustainability. Now, the SIIA has been really working towards a lot of these closed-door Chatham House roundtables, looking in on some of the recommendations to take Singapore's economy forward, but with those ideas in mind of sustainability and also win-win with much of our region and other partners in the world. And in this sense, we're hoping to see the idea of emerging stronger, but emerging better. And that's one of the reasons why we, again, are looking at the sustainability issue. Many of us hope that the world that will emerge after COVID-19 has been more or less managed will be not just back to where it was, but move forward in a progressive way. For Singapore, I'll leave my speakers to speak more, but just to signal some of the changes. As some of you know, I and SIIA have been working on sustainability for a very long time. And we're very pleased that in the last few years, things have really picked up. I think one of the strongest signals came late last year in the National Day rally, and Prime Minister Lee singled out climate change as an existential threat to Singapore and pledged not only to give attention to it politically, but put financial funding resources to addressing the problems. This year, we've seen another shift signal that it takes the naming of the Ministry of Environment and Water Resources to the Ministry of Sustainability and Environment. Our new minister, Grace Fu, has actually been in the ministry before, and I believe that she will really take an effort to take up that new agenda and has been using the term green recovery since taking office. And I think this sense sets the governmental tone in Singapore very clearly, that we're taking it, always taking it seriously, but we're taking it even more seriously, and in much more ways that were developed to handle, to matter to finance and business. That brings us to the three speakers we've got. Sarah has mentioned them briefly by name. Let me add a little bit more, especially for our first speaker, Chris Stevens from the Carbon Trust. The Carbon Trust is based in the UK, though it started a Singapore office just recently. And as a UK government-backed organization, it's now developed into a global entity looking to help companies and organizations reduce emissions and improve their sustainability. Chris is presently in London, where he's joining us in the early morning, but he oversees Carbon Trust regional offices, both in Beijing and Singapore. Before Carbon Trust, he was based in Jakarta, so he does know our region quite well, and looks at low carbon development in energy and land use. We're hoping that he will share with us a bit about the European situation and how they're thinking about green recovery. If I could start with Chris, and then as we go along, introduce the other two speakers. Chris, would you take a microphone, please?
Yes, sure thing. Thank you very much, Professor Tay. Let me first of all just share my screen to make sure that you guys can all see what I've got here. Just to check, can you see my screen now?
I can.
Okay, great. Very good, Noah. Thank you very much, Professor Tay. So yes, my name is Chris Stevens, and I'm the Asia Director at the Carbon Trust. It's a privilege to be asked to speak at this webinar. So yeah, a big thank you to Professor Tay and to the excellent team at the SIIA. Firstly, just a few words about the Carbon Trust. So we are a not-for-profit consultancy that works with our public and private sector clients to capture the opportunities and to manage the risks related to the low carbon transition. While we were first set up by the UK government 20 years ago, we're now a fully independent, mission-driven organisation working all over the world. We opened our office in Singapore in early 2019, building off our 5 previous years of work across Southeast Asia. Our current work in the region includes advising governments on energy efficiency policy and financing, helping corporates to set internal carbon prices, and working with banks on developing and assuring green financial products. But today, for my comments, I'm very keen to focus on how governments can direct their stimulus packages to promote the green recovery. Around the world, governments have been deploying enormous stimulus packages to strengthen their economies in the face of the COVID-19 crisis. There's been a lot of talk about the opportunity for these massive government investments to deliver a green recovery by shifting course towards a cleaner, greener, safer and fairer economy to create jobs and to reverse climate change and to restore nature. However, this recent analysis by Vivid Economics, a UK-based consultancy and a regular partner of the Carbon Trust, paints a rather worrying picture. This analysis focused on the financial support to sectors that have a large and lasting impact on carbon emissions and nature, namely agriculture, industry, waste, energy and transport. Support to these sectors makes up about 1/3 of the $12 trillion that has been committed by G20 countries so far. The Greenness of Stimulus Index shows that the governments have largely failed to harness the green recovery opportunity to date, with 16 of the 20 countries having a net negative environmental impact. As you'll see on the right-hand side of the chart, Europe does lead the way with the greenness of its stimulus to date. It's worth noting that both the parts of the South Korean and Canadian packages...
I can't see the chart. I'm just looking at the first slide. I don't know about everybody else.
Okay.
I've only got the front page.
That's okay. So my screen, it's got the charts. So I'm not sure why that's. Can you see that? Is it changing now if I move across them?
No, I'm not seeing it. Is anyone else seeing it?
Okay. Okay. Let me try and have another. Let me stop sharing and try and do this again. Okay. Apologies about this.
Sorry. When we tested it earlier, it seemed to work. But,
no. I'm glad that you told me. Otherwise, I'd be going for some time. Here we go. Let's try again.
Good. I see a chart now.
Okay, great. So thank you. Okay. Well, sorry. Here's the chart that I was just talking about. So yeah, this is the greenness of stimulus index that's been developed by Vivid Economics. And so I was just commenting that, yeah, you can see that the European countries to the right are generally leading the way. Both the South Korean and Canadian packages are also supporting a range of sustainable activities, but however, they score a net negative considering the full breadth of their support. It's worth noting that of all the developed countries, the US stimulus stands out as being the most damaging. Emerging countries and whose economies are the most dependent on environmentally intensive sectors have to make the most significant progress to turn their stimulus green. So taken as a whole, this analysis shows that the G20 response to COVID-19 has failed to capture this unique opportunity to reset their economies onto a greener pathway, but will instead reinforce negative environmental trends. So today I'm keen to talk a bit about what green recovery tools there are the governments can deploy and look at some of the positive examples from around the world. Just checking, can you see the next slide now?
Yes.
Okay, brilliant. Okay, so firstly, I'm keen to share with you the results of a survey carried out by some of the UK's leading environmental economists. The purpose of this research was to explore which government policies adopted as part of a stimulus package were likely to entrench or displace the current fossil-fueled intensive economic system. The survey included over 200 central bankers, finance ministry officials, and other economic experts from G20 countries, and the results highlighted 5 policies with high potential both for economic multiplier and for climate impact metrics. So, starting at the top right-hand quadrant, you can see there's investments in clean physical infrastructure, that's bubble T, next to bubble Y, which is the greater resources for clean tech research and development. Then if you look on the top left quadrant, you have the bubbles U, which is the building efficiency retrofits, and then you've got the investments in natural capital in bubble V. And then finally, looking at the lower part of the top right quadrant, there are investments in education and training. It's also worth flagging in the far left quadrant at the bottom hand corner there, you see airline bailouts, and I'll talk a bit more about that later on. So when thinking about Singapore's context, all of these recommended policies are relevant. Firstly, while Singapore's space constraints means there's limited potential for large-scale deployment of renewable energy, other options for clean physical infrastructure include increased investments in EV charging points, along with extra cycling and pedestrian infrastructure. And while Singapore doesn't have the same potential as its neighbours for large-scale reforestation schemes, it was positive to see extra funds for coastal and flood protection in Singapore's stimulus package earlier this year. In the next few slides, I'm going to dive a little deeper into the other policies that are particularly relevant, and starting with energy efficiency. So considering the increased levels of unemployment brought about by the pandemic, job creation is a central goal for all governments. As you can see from this recent McKinsey figure, there are clear job creation benefits from investing in the low carbon energy transition. And beyond job creation, investing in energy efficiency delivers projects that start quickly and are rooted in local supply chains, such as construction and manufacturing. Energy efficiency also improves economic competitiveness of countries and businesses and makes energy more affordable to consumers. A good example of a stimulus package that has increased investment in energy efficiencies in the UK, and where there's been investments in the residential, public and industrial sectors. This includes £2 billion in the Green Homes Grant Scheme that provides subsidies to homeowners to fit energy efficiency devices, £1 billion programme to improve energy efficiency in public sector buildings, and £350 million available to heavy industry to cut emissions and drive economic recovery, including efforts to scale up carbon capture and storage and innovative materials. The Carbon Trust has been involved in some interesting discussions with Singapore's Economic Development Board about refreshing their energy efficiency financing programs for industry. It's great that the Singapore government is already exploring new ways to accelerate industrial decarbonisation, and that the extra challenges brought about by COVID will hopefully strengthen these efforts. Alongside the provision of attractive finance for energy efficiency, the government could also introduce subsidies or tax reductions for green or high efficiency products that meet or exceed performance standards. As you saw from the Greenness of Stimulus Index, the European Commission's recovery plan was the standout winner of those analysed. This was because the Commission saw the opportunity of using their recovery plan to accelerate the region's low carbon transition. The European Commission's recovery instrument, the €750 billion Next Generation EU, not only aims to support the recovery, but also invests in Europe's future. In particular, the package is set to support the European Green Deal, which was launched in December last year, and outlines a strategy to transform the EU to become climate neutral by 2050. While there are loads of great examples from the European Green Deal, I'd like to focus on the leave no one behind mantra and the just transition mechanism. This is a good example of a government investment in education and training with a focus on the skills needed to accelerate the low carbon transition. The funding will be used to alleviate the socio-economic impacts of the green transition in the regions most affected by supporting the reskilling of workers, helping SMEs to create new economic opportunities, and investing in the future of the most affected regions. For Singapore, sustainability is a sector where there will also be high growth in high quality jobs, including climate scientists, engineers, technicians, and food scientists. These skills are all essential for boosting the national and regional capabilities to both mitigate and adapt to climate change. There's also a massive opportunity for Singapore to act as a key skills partner to other countries in Southeast Asia to accelerate their own low carbon transitions. Many European governments have also seen their stimulus package as an opportunity to invest in the clean technologies of the future. Increased investments in clean tech R&D present an opportunity to get ahead in key sectors of the low carbon economy, and in doing so, create future jobs and exports. Germany's package for the future included significant increases in R&D spend in both the energy and transport sectors. Olaf Scholz, Germany's finance minister, presented his stimulus as a way to get out of the crisis with a bang. His package included significant investments in hydrogen energy, e-charging infrastructure, and cleaner aircraft. Both the UK and France have also directed their stimulus packages towards R&D into new sustainable transport solutions. Other clean technologies that have received extra funds include direct air capture, drought-resistant crops, carbon capture and storage, and also energy efficiency in heavy industry. The final green stimulus policy that I'll focus on is where governments have bailed out companies but attached green strings to their financial support. With the aviation sector being one of the hardest hit by the pandemic, it's natural that governments around the world have been bailing out their airlines. In virtually all cases, these have been unconditional. However, the French government's support to Air France came with a few green strings attached. Bruno Le Maire, the French finance minister, made the bold statement that Air France must become the most environmentally friendly company on the planet. And while it's certainly progressive move to attach environmental performance requirements to companies receiving bailouts, the further analysis of the Air France climate conditions suggests that there's still a lot of room for improvement. And while the Air France bailout is the first of its kind in aviation and should be applauded, it does fall a long way short of requiring the company to achieve net zero emissions by 2050, as called for by many environmental groups. The other country that's attached green strings to its bailouts is Canada. Here the government has announced that all recipients of support are required to publish reports consistent with the recommendations on the Task Force for Climate-Related Financial Disclosures, the TCFD. This novel approach taken by Canada is aligned with the growing trend aimed at boosting corporate reporting around climate-related risks and actions. Such transparency can become the bedrock of a resilient economic recovery and should be encouraged by all governments. I'd like to stop there, so thank you for listening, and back to you, Professor Tay.
Thank you, Chris. That was very fast-paced and informative. We'll come back to you when the questions start. Let me move on now to Ms. Fang Eu-Lin, who is a partner at PwC Pricewaterhouse here in Singapore, as well as the sustainability and climate change leader of that organization. She really advises PwC's clients on ESG, sustainability reporting, risk management, and just really dealing with the changing climate change policies, both here in Singapore and in the region. And her client includes banks, sovereign wealth funds, real estate, oil and gas. So Eu-Lin, over to you. Would you let us in a bit more about Singapore and the private sector, please?
Sure. Well, thank you very much, Simon, and also SIIA for this kind invitation. Good afternoon to everyone, and I hope that everybody is keeping safe and well. Just to maybe just add on to what Chris has said, and thank you very much, Chris, for the very lovely and informative presentation. I think if you triangulate, to what Chris has shared, to other pieces of information as well, in terms of, say, the climate carbon action tracker and where countries are actually tracking in terms of their ambitions, you find that actually a number of countries are not really at their maximum ambition. And also, if you triangulate also to some of the studies that are also shared by the IMF in terms of how do you in terms of a sustainable recovery post COVID, they also shared that actually there can be jobs created from a green recovery, and against the abatement costs as well. Coming back to Singapore, that certainly many countries can do more in this area in terms of sustainable and green recovery. Prior to COVID, I'm actually very glad that there were already good initiatives in Singapore, such as the fund, the $2 billion fund, green fund that was issued by MAS, and also more recently, despite COVID, the MAS had also issued out the climate risk guidelines for financial services in this country as well, alongside with other regulations such as EPR and carbon tax. And lastly, I was very glad that the EST is also considering sustainability as a main thread, as what we call Build Back Better. But perhaps, I don't have any slides, but perhaps I can share a bit of my own personal views. And also what PwC is doing as well. And I would have to say that the current pandemic is really quite awful. We have already, I just checked Google, and we have about 1.01 million deaths already, and about 34 million people who have contracted COVID. Families staying at home for long periods of time, businesses being impacted. This is really a terrible healthcare issue, but what I'm really concerned about is actually the scarring in the economy, and also on families and also society. So as terrible as the pandemic is, the issue of climate change could even be worse if left unattended. And there are different thoughts about how much emissions will go down by this year. I'm actually quite glad to hear that actually some companies, and we talk about the corporate side of things, right? Some companies are saying, in terms of my decarbonization strategy, I'm not going to count it this year. This year is an anomaly. It's not going to count towards my decarbonization calculations, right? But in terms of this year, some like the IEA, the International Energy Agency, is estimating about 8%, or about 47 billion CO2 ton for this year. And if you read also the UNEP report, the UN Environmental Programme, it says that it was issued out in December of last year, but it said that you actually need about 7.6% reduction every year until 2030 in order for you to have a 1.5 degree scenario world. So the reduction or the estimated reduction of this year versus what's expected tells it takes a terrible incident like COVID to be on track on decarbonization. But certainly COVID is not the solution. And at the same time, it's really surprising how little effect also that COVID has on emissions. And also, it just goes to show that there's so much effort that is being required for decarbonization as well. And I really do think that it's quite dangerous for entities to actually say, that they have high ambitions towards sustainability and towards green pre-COVID, and then suddenly say that they're taking this off the table because of COVID. I think it loses trust in stakeholders and in society as well. And during this period, there are many people who have been asking whether or not countries or organizations feel it's tenable to actually continue with these commitments. But certainly, when COVID first started, there was, of course, much talk about whether or not, climate ambitions, sustainable ambitions would be stopped for the time being due to competing priorities during COVID, and understandably so. But there are signs of encouragement I do see. So based on Climate Week was just last week, and based on the UN climate press release at that point in time, on the 21st of September, it actually revealed that the number of commitments in terms of net zero emissions from local governments and also businesses have doubled ever since last year. And the cities and regions, I think, Chris, you mentioned about the size of the economy, right? Was it about, I think you said about 11 trillion, right? Which is really half of the US economy. And, countries, right, bigger than the US are actually committing to net zero. And then China surprises us, right, last week by saying that they will commit to net zero as a country by 2060. So with that, so those are quite encouraging news. And within those countries and also the companies that have committed, you have about 1,100 companies and about 400 cities that have committed to net zero. To me, this is one of the signs that something has changed in society, in our thinking, and we are moving from a business model which is from a shareholder-focused business model to one which is wider, more stakeholder focused, and perhaps inevitably, because this is driven by changes and expectations in society and also in the environment, which we can see as well. So I am actually very proud to inform that about 2 weeks ago, PwC globally has joined the net zero community, and we have made a science-based commitment to be net zero by 2030. What does this actually mean? So this means that we would include our switch to 100% renewable electricity in all our offices. We will make energy efficiency improvements in our offices as well. We will halve the emissions from travel and also accommodation. That's difficult for us, as you know, we are consultants. But we believe that this is possible with the new work arrangements as we bounce forward. And we also will invest in carbon renewal projects, including natural climate solutions. But apart from us, our commitment is that we will also, as what Simon has shared, we help our clients, and we will continue to press on to support organizations as they develop and implement concrete plans towards net zero or low carbon. We will also continue to press on to support organizations to integrate climate-related, just now, Chris, you mentioned about TCFD, so climate-related disclosures, ESG-related factors into mainstream corporate disclosures. We think it's very important, and we think that we can play a part in it. And apart from climate matters, I'm also very glad to see Sustainable Development Goals, the SDGs, being considered as well. And this SDGs is something which is especially important and an opportunity for ASEAN, a region which is 650 million people and 2.8 trillion GDP pre-COVID. My own view is that if the spirit of sustainability is willing, and if institutions, countries commit to net zero, sustainable development goals, sustainable green finance, and other ambitious goals with regulations ensuing, how do we then ascertain how well these institutions are doing or are meeting minimum bar? Standards, transparency, completeness, reliability of disclosures will help our stakeholders and organizations themselves make assessments and towards their very important ambitions. And with that, you have this whole alphabet soup of standards. You've got GRI, SASB, TCFD, GHG, SBTI, SDG, and others. Some may say that this alphabet soup or navigating this really is a burden, right? But many would say that there is an urgency, and it's a worthwhile endeavor to take this seriously in order to bounce forward with a better business and better society for the long term. So those are just my short opening remarks. Thank you.
Thank you very much, Eu-Lin, for those very insightful opening remarks. We'll come back with more questions, but certainly some of the points you made are very pertinent, that it could easily have climate and sustainability could come out of the frame. But you think there are many good signs that people are taking it quite seriously, including those you are advising. And I think that's a very key indicator of where we are. Another person of very strong finger on the pulse is Jessica Cheam. Jessica used to cover the environment beat when she was a journalist, and she's made it into a business. And one of the most interesting businesses, I think, is EcoBiz. She really has tried to grow this to be the platform where not just businesses, but everyone looks at for understanding where the mood and the actions are being taken for businesses on climate, environment, sustainability as a whole. And additionally, she works on issues such as women's empowerment and skills upgrading for underserved communities. Jessica, would you take the microphone, please?
Thank you very much, Simon. I'd like to thank SIIA for inviting me to be part of this conversation, and also commend you guys for putting this important topic as the discussion topic for today. I'd like to, just start off with some thoughts that I think that this is a great opportunity for us to scrutinize the response of countries as well as businesses to the pandemic and what they're doing to build back better. Simon, you mentioned just now, emerging stronger, emerging better. I think this is a slogan that's been adopted by everyone worldwide. The UN has adopted build back better as the recovery slogan, and even Joe Biden in the US has adopted it for his presidential campaign. But if you think about how realistic a green recovery is, I think Eu-Lin mentioned just now that there are some encouraging signs. We've seen China and Korea declare net zero by 2060, 2050. The Japanese insurer Sompo has also moved away from coal, a big move for a Japanese institution. And that follows the trend of the region's financial institutions in supporting the energy transition. And this is very key in decarbonizing our economies. But at the same time, the COVID-19 economic stimulus packages in the region have made barely any mention of green infrastructure or any other kind of sustainable development. ASEAN's energy transition, I think, has been slowed by falling fossil fuel prices and delayed renewable energy projects. And a recent study of the economic stimulus plans by ING Bank described the region's green response to the pandemic as lamentable. And I think that, among the ASEAN countries, Singapore is doing quite well. They've analyzed that in our package, over 10% of the city-state's recovery budget is going into green initiatives, including green town programs for public housing, and also the plan to phase out internal combustion engines. And of course, we have the Singapore Central Bank MAS signaling the country's intention to become a green hub for sustainable finance. And this is something that's growing tremendously in the region, and we're seeing that's very encouraging. Malaysia is also one of the few other Southeast Asian countries with clear green elements in its COVID-19 stimulus plan, including a Malaysian ringgit 13 billion budget on infrastructure projects to upgrade things like LED street lighting, rooftop solar panels, and transmission lines. But I think beyond our shores, the conversation on that green recovery is rather muted, especially if you compare it to the EU. And we heard from Chris how progressive the EU is, with their Green New Deal and actually tying fiscal support with SDG outcomes. In my opinion, I think the Asian countries are still falling far behind on this, and we really need to encourage governments and policymakers to look at how they can tie any financial support that they give into some sort of SDG performance. So the other point I wanted to highlight was that we recently held a forum called Unlocking Capital for Sustainability, and we had the UN chief economist Elliot Harris who spoke out at our event, and he said that that public policies really have to change if the world is to forge a better recovery. And before COVID-19, the world was actually already off track in achieving the UN SDGs. And that's because public policies have not evolved to match international commitments, such as those under the Paris Agreement to cap the rise in global temperatures. And most available resources are still flowing into unsustainable activities, unfortunately, because it's still profitable to be unsustainable in some sectors. And so I think in this area, civic society is playing a very key role. At the forum, for example, Fair Finance Asia, a coalition of NGOs, actually launched this study called the Asian Web, and they actually scrutinized, the crisscross of financial flows across 7 Asian countries. Singapore wasn't included, but included Vietnam, Thailand, Malaysia, India, and the likes. And it actually pointed out the banking institutions in these countries which were making investment decisions that was bad for society and bad for climate. And I think that this reflects a growing trend that there is a lot of scrutiny on both businesses and governments to do the right thing, especially in light of COVID. And so this green recovery process is being accelerated by civic society because they are putting a lot of pressure and bringing society along with them. So how can governments move in the right directions? I'd like to perhaps just spend a minute on this. And I think, we need to have policies in place like sustainable public procurement, sustainable infrastructure, and these are key things that governments need to put in. In Asia, sadly, we're still seeing governments give out fossil fuel subsidies over renewable energy subsidies. That does not make sense at all. And I think that, that's a travesty for the taxpayer, because we want to be building a world that is resilient and more sustainable. So I think that on the government side, we need a very strong public sector response. Just a very short note on the private sector response, because Eu-Lin has already expanded on that. I think companies are now realizing how important ESG performance is in the times of crisis. And the pandemic has only underscored that critical link between sustainability issues and our human and planetary health. So while, yes, you do see that boards and management of companies dominated by the short-term challenges of COVID, you do also see companies leading the way on the long-term challenges and actually delivering ambitious sustainability targets while building partnerships to deliver those targets. And as a simple example, shout out to CapitaLand, because it landed in my inbox today, and they just launched, for example, a 2030 Sustainability Master Plan, which outlines an ambitious target to reduce 78% of their carbon emissions by then, at a time when the real estate industry is suffering a huge downturn. So I think that's quite commendable. And I think there will come a time where the real estate industry will get to the net zero targets, which we are seeing with the energy players like BP and Shell, and then with Google and Facebook also making these net zero targets, and also PwC, Eu-Lin, congrats on that commitment. I think that that's kind of like a sign of the things to come. So those are just some of my thoughts. Thank you, Simon.
Thank you, Jessica. Again, some really fascinating notes of both concern, like low energy prices, coal continue to be a main source for energy in the region, what governments in the region are doing, but some bright spots of what some of the right policies are or could be. Just one caution about singling out companies. I mean, it's a very good thing to note the ones doing well. I think on this call, there are a number of companies already done some very good things. Some of the banks on this call have taken steps ahead. I think CDL is on this call, and I think they started on green buildings much earlier than CapitaLand. But anyway, I guess in a way of my oddly segueing into the question answer, the nature of sustainability conversations is generally we attract a lot of people who already are believers. We're relatively convinced about it, and there will be questions, but also some anecdotes to share. We've only got until about 5:30, and everyone tells me the Zoom time is very truncated. People can't pay attention. So if you don't mind, if you have an observation or need to yourself, keep it very brief, and then plunge into your question or comment as quickly as possible. I'll give a few minutes for people to warm up, and I'll wait for the question and answer to start appearing in our box. Let me ask the first question, perhaps of all three of you. In terms of the Singapore private sector, do you think a corner has been turned? And if so, who's pushing it? I mean, is it more the company itself, or is it investors, or are they responding to the demands of consumers? Or is it somehow government regulation and expectation? What are the driving forces for the positive?
I can take that first, Simon, if that's okay. I think there is a combination of the above, really. I think, SGX made that first key move in mandating sustainability disclosure, and that was a huge move in getting all the issuers to take sustainability reporting seriously. But then you're also seeing global trends, institutional investors asking companies. I sit on the board of ComfortDelGro, and our institutional investors grill the company every time about the ESG metrics that we have, as well as the targets and how we're going to get there. So I think it's, not just pressure from regulators, but pressure from investors, shareholders, and then last but not least, also pressure from consumers, from employees, from your customers who want to be supporting businesses that are kind of, thinking about our long-term challenges and responding to it.
Great. Anyone got a different point of view or something to add? Chris?
Eu-Lin, after you.
Thank you. Maybe I'll just embellish what Jessica has also said. I think the investor pressure, or encouragement, is a strong point. So increasingly from a perspective of private sector, or my clients are coming to me saying that we have been actually thinking about it, but we need to do it now. right? Because our investors are now asking for it. If you look into, say, the reports of pension funds, of investment companies, you will already see their intention very loud and clear as well in terms of wanting to invest in companies which are more green and more sustainable, even having targets in terms of decarbonizing their own portfolio, which is huge. So I think that is definitely a trickle down impact, right, to the investee companies. And I have to say that some of the SMEs as well during this COVID period are really reflecting and thinking about building strength, as you said, resilience, right, and also building sustainability and brand during this period. A case in point is I had not a large listed company in Singapore, and said that during this COVID period we had to furlough quite a number of our people. But another thing that we're thinking about is sustainability, and how is it that we can bounce back better. What are the ideas that you can give me? So I thought that was pretty encouraging from the SME side.
Thank you, Lynn. I think that's an important point to make, that it's not just the big companies, but also the SMEs. And to return to an earlier point you made during your initial remarks, I think one of the key points I took away was that even this accidental sort of decarbonization by economy stopping during the pandemic hasn't been enough. So we really got to figure out how to restart the economy, but again, keep the carbon lower than it has been in the past. Chris, would you like to add anything from your perspective?
Yeah, I was going to reiterate that it's been really positive pressures from all parts of the economy. So certainly consumers demanding greener products, thinking about their own lifestyle choices and how they can inform decisions by with their own purchasing power. I think the investor pressure is fantastic, and that's been a real game changer in the last 2 or 3 years around financial institutions scrutinizing the ESG performance of companies that they're investing in. I think the point I'd like to make is, I think in the light of President Xi's commitment last week, those long-term government commitments, when they're saying we're going to become carbon neutral, climate neutral, that really just shows the direction of where everyone's going to go. And really, with China saying that last week, that just shows that we're on a pathway to a direction. And what's really exciting is now there's potentially an opportunity for competition to kick in, as in which countries are going to win that race to become low carbon first. And it really changes the entire dynamic in previous discussions within the UN around whose responsibility is it to deal with climate change. Now, who can now capture the opportunity fastest? And so I'm hoping to see that I think COVID could actually be an opportunity to reset and really look at that as an opportunity rather than as a burden.
Especially when you think that China's economy is doing relatively strong compared to a lot of other economies. In our region, Asia Pacific, the World Bank estimates that on average, the whole region will just grow barely less than 1%. But China is most of it. China will grow about 2% is the reason why the average is about 1%. Otherwise, if you look at most countries, we're going to be negative. So that China step, I think, could be very potentially game-changing. Now, again, about the region, rather than Singapore, there's a question that's emerged from Fakhari Abdurrahman, I hope I pronounced that right, from Asia Group Advisors, focusing on climate capture development in ASEAN. How should government push ahead to attract private investment despite the low profitability and expensive technology? I think it's quite an advanced question. I think I'm happy to hear contributions, especially from Chris, who's working in our region on various projects. But the background also, I think, perhaps is, could private sector be motivated to invest in these relatively sort of low return technologies?
Yeah, I think governments should look into different sort of ways they can begin to look at risk sharing mechanisms to begin to attract private investment into key sectors of the future. I think there's a real opportunity to be captured in looking at technologies which are now decreasing in cost, but are going to be a key part of the energy sector, for example. So I think a really good example is the UK. 10 years ago, offshore wind was seen as an expensive and fairly novel technology. A combination of UK government support and the coordination between all the developers in the sector have really driven the cost down now to offshore wind being price competitive with fossil fuels. And so I think sort of informed and long-term government industrial policy, but building local supply chains and promoting coordination across the industry really can begin to drive costs down and really begin to accelerate the arrival of these new technologies.
I think that's a very important point to make with the broader audience, that basically this is about reshaping markets. The SIIA actually led off on the Green Finance Report for Singapore and looking at the region some years ago, 3+ years ago, when things were barely starting. And a lot of times people said, well, it costs too much money or isn't enough flow. even what Jessica and Eulin have been seeing is actually a real upsurge of this trend. Similarly, what Chris is saying is that, like solar and other, and his example was offshore wind. As people start to invest in it, the costs generally come down and the technology becomes more usable, people get more recognize it, and then the market starts to shift to make it more available. Of course, Singapore will never have offshore wind. We don't have much offshore waters. But other countries, Myanmar, Taiwan, might want to think about making those sort of typhoons of some use. So are there questions you'd like to ask each other? I mean, often in a panel, you'd be sitting next to each other so you could nudge each other and ask a question. And while we're in the virtual space, if you want to do so, I'd be happy to hear you engage each other. Jessica, as the former journalist, would you like to ask anything of Chris and his view of what you mentioned Europe, for example, in a very positive way. Chris was saying that, well, you look at Europe's numbers, except for the EU Commission, the individual countries, some of them were sort of in the red zone in the study he did.
Yeah. Thanks so much for the opportunity, Simon. Yes, totally. I mean, I think the EU, has its hits and misses, but definitely as a bloc, I think it's got a lot of its act together, and you actually see coordinated policy come on. And if you look at ASEAN, for example, which is the most direct comparison, we've been talking about the ASEAN Energy Grid for 20 years, and it still hasn't really materialized. And so, going to Chris, how do you think ASEAN really can work together as a region to come up with these policies when it's so fragmented at the moment? Because it's absolutely crucial to the sustainable development of the region.
Yeah, no, it's a real challenge. Then even within the EU, there are a lot of nice sort of conflicting and debates and parts, and many EU members where there's a lot more reliance on coal within the energy mix. There needs to be a lot of support to them to think about how can they manage their own just transition. So I think the EU is making some great progress, and I think the fact that the European Commission scored so highly on its green stimulus was because actually it already set quite a clear transition. The European Green Deal that was announced at the end of last year had already set a very clear projection for where they want to get to by 2050. And as you say, ASEAN is still quite a bit behind that. I think there's a lot of opportunity for greater coordination. I think the work of the ASEAN Centre for Energy is already looking at the ways that you can begin to look to promote coordination around different renewable energy technologies, looking at energy efficiency as the first fuel to use first of all. So the more coordination and lessons that can be learned between countries, the better. And I think that Singapore in particular has got a really important role to play as a financial hub of the region, but also in terms of developing the skill sets that are going to really begin to drive some of those technology shifts that we're going to see in the next decades.
If I could add to that, the SIIA just had a call with a bunch of regional experts, ASEAN and others, about infrastructure and sustainable infrastructure. And one of the key points of what Chris said, the markets and the private finance. If you look at the ambitions of Myanmar, Indonesia, Vietnam, infrastructure is written huge, but their own budgets, the government money, just isn't enough. So there are basically two opportunities for them, or three. They want to avoid debt. There are two opportunities. One is to go to somewhere like China, who really at the moment is not sure it cares about sustainability externally, or the markets. But the markets will be looking for bankable projects, and bankable today will generally bring in sustainability or ESG. That's my impression. Eulin, do you have a view on this? How will markets react to investments across ASEAN?
Well, actually, I was just thinking about how much we rely on the government, right, for all these, investments and push and everything. But actually, if you look at, say, non-government companies, right? Well, I think they also have been making, despite, right, maybe slow movement within the government, but actually, you have seen actually quite a number of companies themselves, very big companies, right, to make commitments saying that, they want to halve their emissions or they want to be net zero by a certain time. So I think we sometimes, always think that we have to rely a lot on the government for them to push. But if you look at, say, for example, the United States, right? Yes, correct, they are out of the COP, right, at the moment. But if you look at some of the companies, within the country itself, they are making good progress. Even at the state level as well, they're saying that, but we're going to go ahead with it. I mean, one thing I've been thinking a lot about is that what is, as I think what Jessica said, what's society's role in this, right? And some of the, I know this is again from the EU or the European side, but during COVID, there was such amazing, innovation, for example. So, during the COVID period, some of the countries or some of the banks, came up with COVID-19 social bonds, right? And this is something which, maybe outside of the government, where people can, the business community or, society can actually contribute to, but administered by, a good institution. So I think that, we, apart from government, are there ways, innovative ways that we can actually, as civil society, as businesses, also contribute to the issue? I mean, the world is not only made up of government, right? They're also made up of individuals, businesses as well.
Thank you. I think it's a very good point. One of the questions that came in from an anonymous person was, can Singapore be a sort of leader in ASEAN for a Green Deal? And I think in a way you've already answered it. One way of looking at it is not so much Singapore government trying to get the other 9 governments to all, follow, but rather the private sector. Whether Singapore businesses do so much abroad, they build industrial parks, they help advise and fund factories and infrastructure, etc., etc. The 3 Singapore banks have announced that they will take on no more coal-fired plants, a decision which even 3 years ago would have seemed unlikely because that's still a business. But they have taken it on, like the Europeans and the Japanese, some of the Japanese, not all. So really it's been much more the businesses, the banks and the traders of Singapore that could have a lot of leverage and more acceptable leverage compared to small Singapore's government trying to tell Indonesia what to do. So I think we have an answer to that. We're almost out of time, but for some reason, though you've been very engaging, I think perhaps you've covered the bases so well, we haven't had as much questions coming in as I thought we might. May I ask you one last question then? Are there, I don't think we're even halfway through the pandemic. You can't know, but I would say maybe my guess is like 1/4 of the way, at the earliest. We are in this for a long run. What is the best thing that could emerge or the worst in terms of sustainability? I mean, we went into this with some concern about climate and sustainability already. Some of the changes have been accelerating for the positive, some maybe negative issues. What's your best hope or worst fear? Could we take it in reverse order? Jessica, journalists think so fast. She's got an answer before I finish the question.
Well, thanks, Simon. I think my worst fear really is that we'll return to business as usual. And I think that there were some concerns already that, as economies start to fire up, their carbon emissions are now hitting even pre-COVID levels, in the China manufacturing sector, for example. That's why I think it's really encouraging that China then came out to say that it's going to try and decarbonize its economy. So going from my worst hope, which is business as usual, I'll go to the optimistic view. And I really think that there's no turning back. I think you talked about a tipping point earlier. And many people ask, is the foot going to be taken off the pedal once the pandemic comes and it recovers and we get the vaccine? I don't think so, because I think people have really woken up to the reality that we have a huge crisis on our hands. And the experts are saying that we're going to see a pandemic like that once every 10 years. And this is a crisis of huge proportions. How prepared are we? And then you think about climate change. Bill Gates has very publicly said that the economic damage from climate change is going to be 10 times worse than COVID-19. And that just blows your mind, right? And so I think that this is really kind of like a dry run for us, and it's woken us all up. And I really hope to see that the optimistic signs that we're seeing will continue very much into the future.
Thank you, Jessica. Eulin, would you like to go next?
Sure. Okay, I'm going to add on to what Jessica said. That it is true. I mean, when you look at analyze the carbon emission levels, right, and also when the economy recovers. Say, for example, the last one was the GFC, right, or the big one, which was 2007, 2008. You will always see a line, right, which is aligned with the growth rate as well in terms of carbon emissions. So absolutely right. I think what has changed right now is that people are more woke to this, and also the other area also is that well, we don't really have that much time left, right? Increasingly, yeah, and so I think that has to be people have to be reminded of that. But I also agree that I think this time around it is different. As I mentioned, there are many different factors that has led to our society being more shareholder focused and now more to stakeholder focused, and this includes our environment as well, and also social. So one of the things, Simon, you asked, right, was that what's something good, okay, that has come out from COVID-19? Well, I would have to say I'll never wish for COVID-19 again on any society or any world. But I have to say that in terms of the ESG, what has really come out really strongly is the S part this time around. You know, how companies have come together, society has come together, you know, to do different things for neighbors, you know, for our fellow countrymen. But I do hope, right, that going after, you know, when we bounce back forward, right, I do hope that the private sector will have a bigger role in terms of climate and also in terms of the social side of things. So that's what's my hope for the future. Thank you.
Thank you, Lynn.
And yeah, I completely agree with both the previous speakers' comments. And I think, well, Eulin focused a bit on the S of ESG. I think my hope is that actually talking about a bit more of the E. So I'm an optimist. And I'm confident that we are moving towards a point where we're now clearly on track towards a low carbon future. And the question is, can we get there fast enough? So with climate change, awareness is there. People are really beginning to move. What I hope is that actually this is also an opportunity to look at some of the other planetary boundaries that we're now moving towards, and in particular biodiversity loss and ecosystem degradation is a really massive concern that's really, you know, not quite on the mainstream radar yet. And I think that there needs to be a really, you know, global focus now on the risks that related to the damage that's been caused to the natural environment and the longer term sort of impact that will have on both, you know, human society's health and economic structure. So I'm hoping that this is also an important year where biodiversity and ecosystems can be considered alongside the climate crisis too.
Thank you. I think we've run out of time and a number of people started ringing off already. But let me try to quickly sum up. I think first, in terms of the pandemic, many times we see acceleration of change. Sometimes it's for the worse. People are scrambling, panicking, and can bring out some of the worst behavior I've seen. But on the other hand, there are hopes that the better side of human nature, the ability to think through for the future and plan and redirect ourselves is also emerging. And I think sustainability falls into that latter camp, that we can perhaps plan for a better future. In Singapore, the changes I talked about at the start, and several of you mentioned how things were picking up before the pandemic, have been accelerated, whether it is finding food for ourselves and becoming more resilient, or whether it is how the green finance is starting to happen, or the transparency of ESG for our companies and disclosure. Those changes were starting before the pandemic, and I think either keeping up, not being taken away, or in fact accelerating. There are a number of studies that suggest that ESG funds, for example, are doing better in the pandemic than others. So I think that in this sense, what we see from Singapore's perspective is that hastening of the good trend. And we hope, as Chris said, it can move fast enough. The question then comes in Singapore's role as a hub for the region. It's an extenuated role because right now, our physical transport and other connections are all a bit difficult, extenuated. But the investment, the trade, the business, I think will resume. And in fact, I think in many ways on economics, many people think now that regionalization will be even more important for Singapore than it's been. So our greenness, hopefully something that not only will play out in Singapore, but through government, through the private sector, through finance, through civil society, and many of you mentioned, will all come together to help play that role of influencing for the better our region. ASEAN and Asia is one of the biggest contributors to climate and has many of the biodiversity richness that Chris mentioned in the last comments he made. It is a region which is starting to become much more woke, as You-Lin said, to the problems. So I think I want to close off by embracing Jessica Chiam's and the optimism that the other two speakers have also shared, and to also thank you all very much, You-Lin, Chris, and Jessica, for taking part in this.